All right, coming up, Jim Cramer is about to make a mad dash right to our set before he heads downtown for Squawk on the Street this morning. He's got a new book. It's out tomorrow. He's going to join us right here to tell us all about it. That's next. Jim Cramer in the house. Thank you.
Thank you.
All right, everybody, welcome back to Squawk Box. It's a Monday morning, and we're watching to see how the futures are faring this morning before we kick things off. Right now, it looks like the Dow futures are up by almost 200 points. NASDAQ futures up by 150. S&P futures up by 32. Then you've got Treasuries. The yields are just a little bit lower this morning right now, 414 on the 10-year, 361 on the 2-year. And guess what? We have a very special guest with us in the house. Our next guest is a dear friend and a best-selling author.
Booyah.
And of course,
Booyah.
Long-term Squawk Box guy, long-term CNBC guy, Jim Cramer.
Well, first of all, thank you for having me. I've known you both for a lot longer than your shows begin, but I love the show, and you know the 30th was one of the greatest parties. Congratulations to you, because you have a book a long time in the making that I can't wait to read. I hope I can get a chance to do so.
Yes, sir.
Fascinating, 1929. I remember when you and I went back from the days of Larry Kudlow.
Yes.
And
yes.
It was
I remember doing something even before that Bullseye. Do you remember? We were kind of like bickering back and forth on set.
Well, look, I tried to hire you for the Street.com 100 times. I said if I got her for the Street.com, we would be successful, and I didn't. Back. So I hired her to be Kudlow's backup, and wow, what a star!
Just
a star. This is Bullseye. This is back in the day, Joan Radigan doing Bullseye. Right?
Oh, yeah.
Jim and I used to play around the edges with that.
Well,
right.
we would disagree.
But we did it it was a shtick. We did it on purpose.
It was just, we had to develop the disagreement. We couldn't really have it, so it was all faux.
Yeah. But it was all part of heat. But I want to talk about why you're here today.
Sure.
I don't want them to roll past this. His new book is out tomorrow. It's called How to Make Money in Any Market. Make sure you go get this book. This is for anybody who wants to figure out what they should be doing. And Jim, this is a different book for you.
Yes, well, it's a how-to book, tough category. Yep. But no, let's say someone mentions a stock here, okay? And a person at home says, you know what, I want to know how to research that. I want to know if it's right. That's the process. I talk about how you observe your curiosity. Here's how you can look into it. Some of it is the fact that we now have ChatGPT and Perplexity. But a lot of it is just like, please invest right. And you can invest in individual stocks plus index funds, which is now somehow against the orthodoxy. So I find that when someone says, look, there's a change at the top in Barrick. We just had right now Mark Bristow just retired. Let's look into that. Maybe it's time to buy a gold stock. But then you see it's up 110. My rules say that's up too much. So we go through it.
General guidelines for doing it. And you're right, this comes as so much of the American investing dollars are going into passive index.
Right. And I'm trying to say, I know you want to invest wisely, as opposed to, I need you to stop buying index funds. It's the opposite. Have index. But I know you're curious about individual stocks, so you wouldn't be tuning in. So here's the right way to do it.
I want to know, if you wrote this book 20 years ago, would it be very different than today? Meaning, do you think it's fundamentally changed how to examine and value shares in a world where the indexes are so important? So, like, if your stock is in an index, that seems to be helpful. If it's not, and could potentially be, that could be helpful. If it's never going to be, that will not be helpful.
Well, look, I think you raise a great point, which is that at what point would I have done this? And I would say, you know what, back then, you couldn't get the stuff you needed. I mean, can you imagine if you have Atkins on, who is a really fascinating guest. How about if you go 2 reports a year? That could be tougher, but I explain how to research it based on the conference calls. But 20 years ago, it wasn't possible for the individual to get the same information that a professional could. Now, because of artificial intelligence, it's the same.
So it's a great equalizer.
It is. I find it incredible. I mean, before I came out here today, I had to look up some things for the 9 o'clock show. I like to do more than one, but I wanted to compare a bunch of stocks. I wanted to compare Barrick with Agnico Eagle, which is another great gold stock. They come on all the time, and Newmont. So very quickly, I can do the comparison just like this before I come out, just in case, hey, Jim, what's new? And it's not necessarily what you would do, but on my 9 o'clock it would be. And I've got it. And I've got the different characteristics. And I have to check because it's so often incorrect. And that's the big problem.
So what is the answer to those three?
It's exactly they're all between 108% and 120%, in keeping with the fact that gold's at a record high.
Okay. One of the things you do, though, is you lay out and explain to people, if you're not in this game, you better be.
Yeah, well, I think that what's happened is people gave up. I find this new generation, and look, we can't discriminate against generations either. Gen Z plays a lot of stuff that I regard as being, let's say, one-trick pony. They'll like
What do you mean, meme stocks?
Yes, they love the meme stocks. Or one of the things that they do 0-day options, right, but they don't invest over time. And when I was living in my car, I put away $10 to $50 a month, and it ended up being a lot of money. And I just want people to invest because I don't want people to work and then die at their desk because it's so hard to save. They think it's hard. Right. They always think they've given up. They think that their parents are always going to be richer than we are. I lived in a generation where I presumed I was going to be richer than my parents.
But don't you think that part of what's happened here is that generation is now trying to shoot for the moon, right? It's trying into less investing and maybe more of a speculation because they feel like the only way out is that.
But they can buy companies that they observe. I mean, they love Robinhood. They should have bought the darn stock. Mm-hmm. They use Apple every day. Don't listen to Jeffries, which says it's not doing that well. Go look at the lines that I posted in Osaka, in Tokyo. I mean, take a look at the lines here. Watch football this weekend.
The iPhone 17.
Exactly. How many ads did you? I mean, I don't know. I was inundated with ads. It was really painful. But I think half of them were for the 17. I'm not buying the 17. Verizon's buying it. T-Mobile's buying it.
Okay. What about all the folks, especially the younger people, who say that the future is crypto?
I say crypto's fine.
How do you value that? What is the sort of process with which you would use?
Well, I'm using it as insurance, and it's an insurance against the $37 trillion that we owe. Of course, we do have a government shutdown, but at least it's not connected to a deadline involving, refinancing for the government, which is really good. The government shutdown is not done at the same time as a possible cataclysm of not paying our bills, but I don't know. I think that crypto is, I'm not valuing it as fun. I'm valuing it as anti what the younger people think is our country's problems. They may know that one. Right. But then again, maybe my generation never has to see it, and their generation is going to have to live with what happens.
When you talk about what the younger generation is involved in, I've talked to other investors who worry that it's into this, as you're saying, almost like a gambling mentality instead of a longer term. And so what do you do for longer term? Does that mean you could still play with some of these things and go after them, but you want to take some of your money and make sure it's there for the long haul?
Right. I want investing, not trading. I think that one of the things that we've made a mistake on is that we do it. Look, the propensity is to talk about buy, sell, hold because we have a lot of analysts on. Mm-hmm. But how about buy and hold? Or buy and homework. So how many times did people trade out of Apple? Because each launch was problematic. How about the incredible rush against what I regard as being the AI market that was great for Meta? It turned out to be great for Alphabet once they won the lawsuit. Mm-hmm. So I just think that there were so many opportunities right in your face. Right in your face.
Right now, you've talked about recently just this idea that there's two economies out there, right?
Yes.
You've got the AI and the tech one that is a booming economy. But on the other hand, you have a consumer that probably needs a little help.
I think the consumer does. And I saw the Fire Pal cartoon. I don't know. I mean, that's hard for me because he's a gentleman. He's worked really hard. Yeah. And I think that I don't want to ridicule a guy who's spent his life, well, he had some private sector. But, yeah, there's two markets. And look at this First Brands. I mean, when you look at it, the liabilities, if you look at ChatGPT, Perplex, whatever, the liabilities are between like $10 billion and $50 billion. Who the heck knows? But they were Anko, wipers, okay, auto light spark plugs. These are big Walmarts. We haven't heard from Walmart. But you want to know that's the American way for the consumer because that consumer is trying to keep their car running.
How do you think about, though, the AI boom in the idea that we're now getting into? We talked about vendor financing last week. When NVIDIA does this sort of massive deal with OpenAI, and I don't know if you saw Bill Gurley actually out online over the weekend saying this is when you get into a situation where it gets more complicated.
Who is going to go against Gurley? He's terrific. And what I would say is this. That was the one that really disappointed me because as long as we don't have vendor financing, it's very hard to be like Nortel. I have a piece this weekend for clubs. And it's very hard to have Lucent. Very hard to have Nortel, which ended up having very bad orders because it was all done with cash. This is the first one that's done with debt, and I think that they're going to continue to make contracts and continue. Look, this thing, this OpenAI, people think it's worth $1 trillion, but what does that mean, worth $1 trillion? Worth $1 trillion. I mean, and therefore they can be able to raise $500 billion. I mean, you need that Oracle,
Right.
Right? We don't know how much Oracle's going to be. They're on the hook from OpenAI. Now, I don't agree that the $100 billion over time that Jensen Huang from NVIDIA is giving to OpenAI is necessarily a quid pro quo. I think that they've made it very clear that that's not. But I'm sure the skeptical people are going to say it is.
Well, I just think the larger question is none of these guys are really making money right now. Now, part of it is because they continue to grow and they continue to keep investing in the business. Maybe if they stopped it,
none of the
large language models are actually making money.
NVIDIA
and so here you have this situation where, but they're the ones who effectively are ordering the chips. They're the ones who need the data centers. They're the ones who need the energy. All of these, and they're making massive commitments without the cash on the other end.
Totally true. Now, like, Sam Altman said, there's a lot of demand, right? But I had Joaquin Duato. Okay, he's the CEO of J&J. Yeah. They have the best cancer franchise, and the stock's doing. And they're doing nothing with these big guys. Why? Because the big guys are saying they're going to cure cancer, but why don't they work with the companies that are trying to cure cancer?
Right.
I find a lot of these companies are so busy building out that maybe they haven't even figured out what to do with it. Now, the new generation, okay, the Vera Rubin, has got reasoning. And reasoning is the real threat to us. Look at that Doug McMillon piece that we saw this weekend about Walmart. Yeah. He says everybody's job's going to change. Whose job's changing so far? I mean, all I know is that, yes, we could all be holograms. But I was called a hologram in 2012 by Elon Musk, and I'm not a hologram. But we could easily, some people could be replaced by people who are not people, because this news business doesn't make any money. Have you noticed that? Are you conversant with that?
Versant. Like how you slipped it in. Well done.
Conversant. Like I didn't say anything about versant. What, are you crazy?
Very quickly, Ed Yardeni had a piece out this morning, and it reminded me of your book, just because he said, look, this looks like the Roaring 20s, and things have been great since 2020, really, overall. Right. But your book is about how to make money in any market. I think what happens if that changes?
Well, I think
rules still stand.
Yeah, absolutely. And remember, half of what I do is supposed to be index funded. We do have a Roaring 20 and then a crash, which I don't think so, because I can distinguish. Until then, what Gurley was saying with the pseudo vendor financing, I still believe that it's really possible for people to ride through a crash. It was possible to ride through 2000. It was possible to ride through 2008, provided you didn't trade out. And that's where Warren was so right. Remember, he said, if you had held, you did fine. Now, people who needed their money in 2010, 2011, they got hurt. And you know better than anyone, because the book was so good.
Oh, thank you.
The book was really good, man. I bet you 29 is going to be fabulous.
Well, we're trying.
Give me a villain. Give me a villain.
A villain?
Yeah, come on.
Oh, there's so many villains, but nobody goes to jail in 29 either.
Isn't it something? How about Fisher? How did he look?
I mean, Fisher, we're talking about Irving Fisher, the great professor. I mean, he didn't look so smart in the end.
No. Professor.
Not
so smart.
Not so
you
smart.
Guys are smart. I love this show. I watch it every morning, okay?
Well, we watch you every morning.
But I think you guys are sensational, and it is a delight to be here.
And we love having you, Joe.
I want you to come, obviously, on Mad Money. You'll be there.
God bless you. I will.
Give you a good chunk of time, because you deserve it. You know, my wife watches the show, and she says, you know, I love these guys. She loves both. She thinks you guys are the absolute greatest. I don't like how much she likes you.
Thank you, Jim.
I know.
Well,
she likes your wife.
I love your wife.
Thank you, Lisa. Great.
Thank you.
Jim,
thank you, guys. Thank you for having me.
It's called How to Make Money in Any Market.
Show it on the screen, folks. Yeah. Booyah, right there.
Isn't it tough to still be promotional?
No.
Aren't you embarrassed a little?
No.
All
Go
right.
on Amazon right now and buy the book, folks.
Jim,
Thank you.
Thank you.
Love you guys. Thank you.
Love you. Coming up.